What's up, y'all, man? We are back. We are back live once again. Back into the Forex market. Today, the CPI data has released. It has shown that inflation will be stagnant for now. So it's not really going anywhere. Uh, but the market has fallen, as y'all can tell. The market fell pretty good. I got in a little too early. I wanted to show y'all earlier uh, of me really losing really bad, and it's because I got in the trade super early, man. Like I got in like way too early, and I knew I should have waited because I drew my line. I drew this blue line here, but I saw it going upwards, and then I started reading the news as well, and I got caught up, and I got a little bit of FOMO, y'all. Uh, and look, as it's saying now, U.S. stocks failed to hold gains, and it wasn't saying that before. Before I had read this part: inflation follows, CPI cools, but the core stays high. Wall Street rises as inflation data soothes. Rate hike jitters. Rate hike jitters. Uh, so it's saying that it kind of slowed down, but the market moved a whole different way. So I wanted to show y'all earlier on what not to do as a trader, because I don't want to just show y'all me. Now y'all gonna see where I'm kind of like saving myself. But but earlier, man, it was not looking good. But I held on to the trade because I knew it was gonna go upwards, just because we like went into this area here. So that's what like gave me the confidence. But now I'm like kind of uncertain. I still think we should go. Now we should at least come back to here, which I thought that's what we would do in the beginning, but that didn't happen. It fell down quite drastically. So I got in this area right here. So I was looking at it from this point of this was like I was saying, thinking that this would be a support area, but actually this was the real support area. That's why you see the blue line here, and this is actually from yesterday. So if I had just been patient and let it fall first and then jump back in around this area, I would be fine. So I was down negative 200, and has been released. I was down like 250, man. It was looking bad for you, boy. And then once it came back up, I just went ahead and took the loss because I made like 92 yesterday. So I went ahead and took the loss at like $70. That way it wouldn't. That way I don't mess up my profit from yesterday as much. So like now I'm just like $20 in profit, I guess you could say. But uh, yeah. So hopefully y'all can see me make a good little comeback. If not, man, this will just be a L day, and I'll just take it for what it is. Right now, I think I'm probably down about $5 to $10 somewhere around there, and my computer acting crazy. Yeah, so I'm down $5, staying in that mix. Uh, and I'll show y'all this on the screen too, so y'all can see the trade. So I got out of the trade whenever it came back up. I got out like right around here, and then it fell down. I had set a stop loss. I set my stop loss to a point of where like I set it to where I just lose what I made yesterday, basically. So once I got out of it, I saw that now it's building a new base. It's building a new support base, and it's pretty much not going down below that. So that's a good sign. And then we also stand above this median line here. So that gives me confidence that we should be pushing upwards. But I'll just be taking quick profits because I'm not too high on the move. You know what I'm saying? So, but I wanted to show y'all, man, earlier of what not to do as a trader. But basically, just be patient. You know what I'm saying? Be patient. And honestly, I should have. What the fuck? Honestly, I should have took my loss earlier, but I didn't, and I let it run down, and it got pretty ugly, right? It was like negative 250, man. It was bad, y'all. It was bad. I was like, damn. But just knowing and seeing the market, I knew it would come back up, so that's why I just kind of held the trade. But I should have just got out. As a smart trader, I should have got out and then got back in at the bottom once I got this right here. But earlier I got tricked because I saw this candle. See this candle right here? That's showing, but it's still bearish. So I should have thought about that before I got back in, but I didn't. So we all make mistakes. It is what it is. I'm not too upset about it. But like I said, we'll be taking quick profits. So we up $3. So I'm gonna go ahead and take that. So now I'm at like a $30 loss, and of course, as soon as I get out, it goes up tremendously. Uh, but just showing y'all how to like get yourself out of holes and like be better at trading. I'm also gonna go over what the hell CPI data is since I got that in my title. I want to go over it with y'all so y'all can get an understanding of what it actually is and how it affects our market. Also our economy as well. All these things, man, they all tying together. Like you would think that it don't really matter, but it actually really does matter because this is preparing for the next FOMC meeting with the Feds and figuring out what they're gonna do about raising the interest rates back up. Because that's why whenever they rose the interest rates up so high, that's why the banks were collapsing because you know how banks where banks work, where you put your money in and then they go invest it. But since interest rate was up, market was falling tremendously. So these banks weren't making money with your money. So that's how they ended up collapsing and crashing. You know what I'm saying? Uh, what is CPI? But so yeah, so I kind of saved myself today. We had negative $30, and as y'all can look on the chart, I was right in my move. Sharing this tab, yeah, I was right in my move. So it did go upwards just as I thought, but I just got out of it just in case, since we on a rocky road right now. But I told that's why I told y'all we just gonna take quick profits. And reason being, I'm taking quick profits is because we're so close to this zone right here. This is a resistance zone. Uh, it was a resistance zone, and as you can tell, it went over that, and then it hit my next resistance zone. Then it became support, and then it fell through that part, and then that's why I got my next support line here as well, just to show y'all. But just sharing these links out right now. You know what I'm saying? But yeah, I really wish I could have showed y'all that move so y'all could see the panic in my face. You know what I'm saying? I was panicking, y'all. I was panicking. I ain't gonna lie, man. I was like, oh snap, this is bad. And then I started going through the motions of why didn't I take out earlier? So that's why whenever it came back up, I was like, all right, let me get back to being a smart trader because I'd rather have a negative $30 day than a negative $250 day. Like I can bounce back from negative $30, but it's very hard to bounce back from 250. It's very hard, especially because then you start losing what you can do with the account as well. So yeah, so now I'll be more patient and wait on the moves. Also, my computer is messing up as well too. But right now, since I'm waiting for my next move to happen, we are gonna go sharing this tab. Sharing. Wait, which one I'm sharing? This one. Sharing this tab. Okay. So now we're just gonna go over what is CPI data. There we go. So it says the consumer price index is a measure of the average change over time and the prices paid by urban consumers for a market basket of consumer goods and services. Indexes are available for the U.S. and various geographic areas. All right. Uh, so reading that, you like, all right, what the fuck that mean, right? What is? I'm even reading it like, yo, what? All right, what does that mean? Let's see. How does CPI relate? Yeah, let's look at how does CPI relate to inflation. So that's a good thing about my channel. I'm showing y'all. I'm showing y'all stuff, and also while I'm showing y'all, I'm learning as well too, right? Because I know what it means, but like looking deeper into it, I haven't done. So I'm just doing the research with y'all, and that's what it's all about. You just gotta research, man. You gotta research, and that's how you become a better investor, a better trader. That's what it's all about. But anyway, so how does CPI relate to inflation? CPI tracks the rate of change in U.S. inflation over time. This key economic metric is based on prices that consumers pay for goods, blah, 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 same thing. The percentage change in CPI over a period of time is referred to as the inflation rate. All right, let's get a deeper look. So yeah, we just gonna learn, man. We gonna learn, man. This is what you do. This is what you do. You learn. So I think today is the CPI, and tomorrow it might be PPP. I think that's what it's called. Shit, I don't even. I think that's what it's called. I might be wrong on that, y'all. I could be wrong. All right, so now we're gonna look. All right, so let's see. What is CPI? All right, so my move was right. I was correct on that move. So now we're gonna go ahead and get back in. And we're gonna scale. So I don't know what this thing doing, you know. All right. I feel like I'm getting a little in too high. Damn, it's gonna catch me at the top. Damn it. So that's my computer going slow. Hopefully my stream not going slow. It probably is. So if the stream messing up, it's because my computer just being a little a butthole right now. And it just messed me up on my trade too. But it's all good though, because we see the movement now. All right. So, god damn it. Where do you come from, bro? I'll get rid of you. All right. All right. So, all right, we already figured out CPI tracks the rate of change in U.S. inflation over time. Consumers pay for goods and services throughout the U.S. economy. Over time, inflation rate. The U.S. Bureau of Labor Statistics releases a monthly CPI report that includes statistics about how the prices of different goods and services changed over the last month and the last 12-month period. The most recent CPI inflation report for January 2023 showed that the prices rose 6.4% over the prior 12 months. That means the cost of basket of goods and services in the U.S. increased by an average of more than 6% from January 2020 to January 2023. So you know how whenever they send eggs, you know how eggs are super expensive right now? This is why. In addition to the headline data, so I wonder if it's for barbers too, bro. Because them barbers, boy, they're making some money right now. Boy, they jack that price up. But in addition to the headline data, there's something called core CPI inflation. This measures offers a more stable reading on inflation because it strips out the volatile food and energy prices from the calculations. I need to read my damn listen to my screen real quick to make sure, because like my computer like freezing up a lot, man. So I want to make sure that it ain't freezing on y'all. Yo. Y'all. Yo. Testing. 1, 2, 3. Yo. All right, so it's a little delayed. it's a little delayed, man. Shout out to my computer, man. Shout out to the computer. Yeah, it's messing up. God damn. Testing 1, 2, 3. So it's a little delayed. It's a little delayed, man. Shout out to my computer, man. Shout out to the computer. All right, so yeah, it's messing up. God damn. Testing 1, 2, 3. Yeah, so if y'all missed it, man, we're going over what what the CPI data means, what's it for. Like I was saying before, the reason why y'all be looking at how the price of eggs jump up so high is because of CPI data and affects goods and services, right? So goods would be like groceries, maybe an oil change or something like that, you know. Services will be the oil change, probably something like that, right? Parts, labor, all that stuff. All right, so let's go back here. The most recent support showed that CPI rose over 6.4% over prior 12 months. That means the cost of basket of goods and service in the U.S. increased by an average of more than 6%. In addition to the headline data, there's also something called core CPI inflation. This measures offers a more stable reading on inflation because it strips out volatile food and energy prices from the calculation. The annual core CPI inflation rate for January 2023 was 5.6%. This reading was down from the most recent peak 6.6% for the 12 months ending in September 2022, which marked 40-year high in core CPI. How CPI calculated? CPI is calculated by tracking the change in prices of fixed baskets of goods and service. I now read it about 30 times. The BLS refers to a variety of sources to calculate CPI, including the price of goods and service from about $23,000 retail and service establishments throughout the U.S. It also collects data from about 50,000 landlords and tenants to determine the change of price and rent. So this is also for rent too. So whenever I'm assuming whenever CPI data rises up, rent also rises as well. So that's why that's something I didn't know. Like I told y'all, if y'all didn't hear it because my computer was slowing up, you would look at this, right, and be like, oh, it don't really affect me. But all this stuff actually really does affect all of us, right? Because we're here in America, right? So, yeah, I didn't know that whenever inflation goes up, it also, well, I knew inflation, price of everything went up. But seeing now that it also affects your rent as well, and while those prices go up as well, it kind of gives you a good insight of things, right? All right. And then this is about to tell us how does CPI affect you. Okay, we'll keep reading. It also collects data from about 50,000 landlords and tenants to determine the price and the price of rent. The basket of goods and service used for CPI includes popular items that Americans regularly purchase. The value of the items is proportional to how they are sold. The current cost of the basket is compared to its cost in the prior years and then multiplied by 100 to determine the percentage. And this here is how they calculate CPI. All right, so how does CPI affect us? How does it affect us as Americans? CPI figures might seem pretty abstract, but they reflect the very real price changes that affect every aspect of your day-to-day spending. The CPI impacts your finances by measuring your purchase power, guiding economic policy, determining government benefits, driving salary increases at work. Okay, so it does affect us pretty. It affects us. Shit. All right. CPI illustrates how much each dollar you earn can buy. As inflation drives up prices, the purchasing power of your money declines. That means you're able to purchase fewer goods and services than you did previously with the same amount of money. CPI's economic indicator, a tool used to determine the impact of government economic policy. The Federal Reserve prefers a different measure of inflation, the personal consumption expenditures price index, PCE. Oh, okay, so that's the other one. It's PCE and CPI. So I think the PCE is tomorrow. All right, yeah, I think it's tomorrow. But it also pays attention to CPI. The Feds have begun raising interest rate due to high inflation. Say that's back to the FOMC meetings, the Fed meeting. Everybody right now everybody is worried that the Feds are going to continue hiking up the rates on us. Also, I want to show y'all how I put in that trade real quick. We're going to stop real quick. I'm going to show y'all. So we back up $42. So now I'm like $10 in profit. So that's how you turn the day from negative to positive. You know what I'm saying? So I wish I could have showed y'all. Computer was messing up. It's kind of hard to show y'all the trade as well too, but now we are back in the positive for today. Let's see where we at. I'm gonna show y'all. So that's the whole point of the channel, man. Not only I want to show y'all how to make money, but I also want to show y'all what's going on in the world. Because man, it honestly it all affects us. Like it might seem like I'm just trading to make money, but also I'm trading thing that affects us. You know what I'm saying? I'm just making money from it. So I wanted to show y'all my phone. Y'all see that? Maybe a little bit. But see how I turned that to a positive day. So we're good. I think up $5 right now. So we're only up $5. It is what it is. I'd rather be up $5 than lose $2.50. So I'm comfortable with that. I'm fine with that. And that's one thing that you start to learn as a trader. Like, all right, man, it was bad for me at first, and then I made it come back good. You're not always out. You don't have to count yourself out. That's why I'm supposed to take my losses early. I should have took it early. I didn't take it early, and it almost cost me. But luckily enough, I believed in the play because I saw it. And also, I had the fundamental analysis in my head as well too, of what was happening with the market since it rose up. I stayed with the news, but I also stayed with the technical analysis, if that makes sense. All right, so back to the tab. All right, so guiding economic policy. CPI is an economic factor, a tool used to determine the impact of government economic policy. The Federal Reserve prefers a different measure of inflation, the personal consumption expenditures price index, but it also pays attention to CPI. The Fed has begun raising interest rate due to high inflation. Determining government benefits. The federal government uses the CPI inflation rate to adjust payment for programs like Social Security, COLA, food stamps, and public school lunches. So that also affects us as well. If you have a child in school and you wondering why are your kids' lunches, the price of their lunch is getting higher and higher and higher, this is why. It's because the inflation rate has risen. So the CPI has risen, and then the Feds have risen the interest rates. So everything just up, and it's honestly, I believe that it's up. Everything's up right now because they're trying to make up for what all that happened in 2020. 2020 was a big year. 2020 was a year where you either became rich or you became a little stagnant. So you either made some money or not rich, but like you either made some money or you just didn't make money and whatever, you know what I'm saying? And now it's affecting. So you ever heard the saying where people say, you never know what you do today, how it can affect you 6 months? That's kind of how it goes with life, right? Like we didn't think that 2020 would be affecting 2023. You know what I'm saying? So always remember what you do today can affect you 6 months down the line, a year down the line, 2 years, 5 years, and possibly 10. So it's always good to just practice making good decisions, good sound decisions. That's why I'm doing this channel, to teach people how to invest. I'm gonna drop a video as well on why people don't invest. So that's a video coming soon. That won't be live. That will be an actual video. So make sure y'all check it out. Make sure y'all like, subscribe. Hopefully y'all watching this channel right now, because I'm giving out some good game, and it's all for free. Because y'all can see I'm making money to my left while I'm showing y'all stuff on the right, right? All right, so income, food stamps and public school lunches. It also uses the CPI to adjust income eligibility eligibility levels to participate in social programs. Driving salary increases at work. Private companies look at CPI inflation when deciding how much to increase employees' wages every year. CPI data is a reliable metric for keeping prices and wages in line with competitors. So that's another one that can affect you as well. So that's a little bit of what's going on with the world. So I just wanted to show y'all that, man, and give y'all a quick overview over it, because that's also something I didn't like always hear of it, but I never knew what it actually meant. You know what I'm saying? So it's just good to educate yourself on stuff. Like that's why I'm educating myself right now as well too, because I'm like, all right, now I'll keep. So like I said, I've only been trading for a year, right? Last year, I didn't know about any of this stuff. I didn't know about FOMC meetings. I didn't know about CPI or PCE. I didn't know about it. So I was sitting there trading while all this stuff was going on, and I had no clue about it. But some like 2 months ago, I was like, man, you know what? I want to figure out everything and figure out what it means and how it affects me, so I can be a better trader, right? Because that's what it's all about. Like, I'm not just trading for fun. I'm trading for financial freedom, first off, and also I'm trading because I want to be the best. You know what I'm saying? Like, I don't want to half step nothing that I do. So that's why I'm going through all this stuff, showing y'all all this different knowledgeable stuff that like or might hear about, but we don't know about. So, I'm right here with y'all going through it because, I'm learning, and hopefully that you can learn too. All right, so now we're gonna go over PCE real quick because now I'm pretty much back in positive, so I'm not too worried about the market right now. Because like I was down 250, came back up, now I'm up $5, and that's good for me. I can walk away without not too much of a win, but not a loss. You know what I'm saying? So we're just gonna go over and kick some game, get some knowledge. All right, so share this tab with y'all. So this is the PCE price index. Let me look on my phone, see what day PCE data comes out. I'm pretty sure it's PCI first and then PCE the day after. What day does PCE data come out? So it says, okay, so it was last month. Next release, April 28th. Okay, so the personal consumption expenditures price index releases April 28th of 2023. All right. So that will be coming out on the 28th, and then that'll also affect the market as well. And then the FOMC meeting schedule will be April 27th and the 28th. So that second day on the 28th, that's when the what's his name? Forgot his name, but yeah, that's when the dude will be speaking, and he'll drop all of what they discussed and what they're going to change. Everybody is hoping, praying that they don't raise the interest rates again because that's going to drop the market. People going to lose money. Banks going to start. Another bank could possibly fail. We never know, right? Uh, and then on that same day, they'll release the PCE data. All right, so the PCE is prices for goods and services change constantly, rising and falling as companies and consumers react to trends in the economy. The PCE index tracks the consumer side of this dynamic by measuring changes in the cost of living for households rather than for companies or other economic factors. It does so by following the prices of a basket of goods or service, each of which has different weightings to reflect how much a typical household spends on it. If the price of gasoline rises, for instance, that has a bigger impact on PCE than if the price of tomatoes goes up because gasoline represents a larger portion of typical consumer spending. I don't know about y'all, but I got gas today and it was $3.73. Now I got to get Supreme right or whatever the hell it's called, and like just 2 days ago I paid like $3.43. So that was a 30-cent increase. Like that's crazy. You know what I'm saying? Like we damn near close to $4. Anyways, and this is why. You know what I'm saying? So while the PCE index has a lower profile than the consumer price index, it's notable for a few reasons. Core PCE is the Federal Reserve preferred measure of inflation, helping to guide the central bank. All right, get on, dog. Core PCE is the Federal Reserve preferred measure of inflation, helping to guide the central bank's monetary policy decisions. Price data for the PCE index comes from surveys of businesses rather than what consumers say they're spending on goods and services. So it seemed like PCE come from businesses, and then CPI comes from the people. I guess that's why you see consumers, because we're the consumers, and then you have the PCE, which is what the fuck is called? Personal consumption expenditures. But that would sound like it comes from us too, right? But the PCE baskets of goods and services change regularly to account for substitution. When prices for one item rise, consumers shift their spending to cheaper alternatives. It also measures expenditures on goods and services made on behalf of consumers, like spending on medical insurance by employers or government programs. All right, let's see. All right, so let's check the difference of the two. All right, market's still going up, man. So hey, that was actually a good trade. I was just early. So I'm reading this as I'm still watching the market, man, because that's what I do, baby. I love this stuff, y'all. I love this stuff, so that's why I'm delving deep in it with y'all. If y'all getting some good information out of this, man, like the video, subscribe, holla at your boy, man. I'm putting out good information. It's for y'all, and it's for myself as well, because I want to be the best. And I want to get rich. So CPI and PCE index both measure U.S. inflation in similar but ultimately different ways. Both measures change in a basket of goods and services, but the CPI is based on survey data from tens of thousands of consumers instead of reports from businesses on what they sell. CPI doesn't account for substitution or costs paid by others that consumers benefit from, like employer-sponsored medical costs, making PCE more comprehensive, less volatile, and more accurate. CPI is not revised, it's been published. That's because the CPI has been calculated using changing methodologies over time, preventing the Bureau of Labor Statistics from refactoring historical CPI figures. When the methods for calculating PCE are revised, they are applied to historical data as well. CPI tends to show higher rates of inflation than the PCE index. From January 1995 to May 2013, the average rate of headline CPI inflation was 2.4, whereas headline PCE inflation was 2%, setting both indexes equal to 100 in 1995. CPI inflation was more than 7% higher than the PCE index in May of 2023. So, hey, man, I don't know if we making more money now or we might be making less money, but they hiking everything else. So This is good stuff to watch from. Like, look at the jump of that, man. Like, that's huge, yeah. And the CPI is even more. And this just goes to 2013. So it's been starting from 20, and we 7% higher than that. That's kind of crazy, yeah. But that was just to give a general idea of what's going on. So just we went over. I showed y'all how to lose some money, but also how to make it back in the market by being patient, being resilient. That's one of my favorite words that I learned from the military. Resilient. But you got to be resilient. Got to be confident. Uh, and also, I took some L's, and then I took some dubs. You know what I'm saying? I just did it all smartly. That's just how it panned out. Today should have been a $200 day, but since I moved in too early, it was a $5 day. And you know, I'm cool with that. That happens. You know what I'm saying? It is what it is, right? But hopefully, like I said, hopefully y'all learn some game. This is gonna be the end of the video for today. Because I'm gonna step away from the computer, so I'll step away from the charts. Because no telling what happens at this point. So yeah, no telling what happens today. But hopefully y'all got some good knowledge out of this, some good game. You can go to Google and type in the same thing that I typed in if you want to go read up on this stuff later. But thank y'all for watching. Make sure y'all support your boy, man. The likes are free. The likes are free. The views are free. The channel is free. All you gotta do is like the video, subscribe, all free, and you'll be getting much more game than a lot of people give y'all on a daily basis. Because that's what I do, baby. But thank y'all for watching. It's your boy Litty signing out. Let's get it.